Okay, welcome everybody. It's Joe Fahmy. It is Tuesday, March 30th, a little after 7:30 p.m. Eastern. Thank you everybody for being here. It was an unscheduled webinar, but I just wanted to go over a few things. Just a quick announcement. There won't be a webinar this weekend because of the holiday. I want everyone to enjoy their long weekend, Easter, Passover, and the overall long weekend. There'll still be the midweek video tomorrow and Saturday, but no webinar. And instead, I don't mind doing this one because I'm actually seeing a few things that I wanted to pass along. So I just wanted to keep you updated with the schedule. I mentioned that I'm seeing some positive developments. I want to stress, and I'll probably stress this like 50 times during this webinar. It doesn't mean that we're out of the woods yet, but they are positive developments. We still need the market to prove itself, but at least it's a step in the right direction, hopefully. So let's start with the first one on a daily chart of the Nasdaq Composite. Is that I'm noticing this recent pullback. If you notice, it's happening on lighter and lighter volume. So in fact, today was the lightest volume day of the year for the Nasdaq. That could be, again, the key word is could be, a sign that the sellers are drying up as far as this leg down of selling. It's just something to pay attention to, and it's nice to see that the volume is decreasing on the way down. So that is definitely a positive sign. However, again, I would still like to see if volume comes in to get us back above that 50-day and some more stocks to set up. But also, when I take a look at the S&P 500, we had a bounce last week off of the 50-day on some pretty nice volume on last Thursday and Friday. And so far this week, it's just been a super tight range. As you know, that tightness in price action, whether it's on individual stocks or on the markets, on the general averages and indices, it's still a very constructive sign when you had that nice bounce off the 50-day. And again, super second lightest day of the year on the S&P 500, super light volume. The Russell still needs to get back above that 50-day. It did have a distribution day. It was kind of an ugly day yesterday, and it was light volume. So we still want to see that get back above that 50-day. But I think this level, this 2070, 2080 level seems to be decent support for now. But what I was mainly pleased with is that we just had a couple of light volume days so far this week. And again, that's one possibly positive development. The second one is sentiment. There's still some steady put buying, which is good. I'm just seeing and hearing and talking to traders that are incredibly frustrated. I think that has to do more with I think people forget when the market's so strong for so long. They forget that the market can actually go down. They forget that it can correct. I've talked about this before. We live in an incredibly impatient world with real-time information on social media, on our phones and emails, and everything's chiming all day. And I think that adds to people's impatience. That's why I said this maybe 100 times in the last several videos, patience. But from a contrarian point of view, it's I don't want to say it's nice to see people frustrated because that sounds kind of torturous. But as far as it's reaching levels where people are getting very frustrated with this market, especially the growth traders. So there's definitely some, which is leading to some people buying puts. From a contrarian point of view, sentiment's just getting a little bit, worn out. So that's a good sign. But the third positive development, which is the most important one, is I'm actually starting to see some potential stocks setting up. As you know, 90% of what I use to judge the health of the market is the price action of stocks. And I'm noticing some stocks acting a little bit better. Now, again, that doesn't mean we're out of the woods, but it's a good sign. Really quick, when I go through my screens yesterday, these three main screens, 1, 2, and 3, which I go through for the new members who use MarketSmith, they're in the bonus content section of the website. If you don't use MarketSmith, you'll also find screening using, if I can speak English, screening using FinViz. I tried to replicate these screens as best as I could for people who are interested in screening. I recommend doing some screening to get a true feel for the market. If you don't have the time, try to do it over the weekends, or I guess that's what you hire me for, to do it for you and to give my best interpretation of what I'm seeing. I digress. Yesterday, when I screened through these first 3 screens, about 400 total stocks, it was the first time I found zero. I usually write down some names. I was telling a friend who I trade with, I said, it can't get worse than zero. As far as literally, I did not write down one name. And I said, this has to be some sort of a turnaround point, when literally there was nothing that was interesting. But that's why you screen every night, because some things can change quickly. I always tweet out, keep your head up, stay focused, be on guard, keep a watch list. So when I ran through some of my screens today, I noticed that there were some stocks acting a little bit better. So that's a good sign. And I'm going to go through about 25 or 30 names, and then I'll take questions. The first half of them, 12 or so, are semiconductors. That is where another reason why I screen is to help me gravitate towards the strongest sectors. I've talked about this several times. There is a chip shortage, not potato chip, semiconductor chip shortage. Although there's a potato chip shortage in my house, but that's a whole other story. Anyways, there's a chip shortage, and why is there a shortage? Because chips are going into everything, all the new technologies and AI and driverless cars and everything, appliances, and there's huge demand and there's less supply. That is good. Any sort of it's economics 101. When demand is high and supply is low, that's a good thing. So if you want, SMH is the main semiconductor ETF. If you want, take a position in this. I like how it got back above the 50-day, and same thing, paused on Monday, Tuesday on lighter and lighter volume, because I'm about to go through 12 or 13 names, and you might say to yourself, well, I don't know which one to buy, and you're all over the place with so many ideas. Again, it's idea generation. I'll tell you the ones I'm in or ones that look decent as far as buyable entry points. But if you're not sure, I still think it's worth having broad exposure. There was also a monster on Monday, I believe, or last Friday or Monday, a monster SMH August call, like 10,000 call, big block that was bought for August. I forget what strike it is, but I'll include it below the video. And that's a good sign for potentially higher prices. So a lot of the stocks were in the chip space. I'm going to go through some of them very quickly. Lam Research, LRCX. Also, what I'll include below the video, I'm just trying to find my pen. I'll include the SMH trade, and then B of A I'll include the link. B of A had a great quick research piece on chips, talking about the ones that are going to benefit specifically from chip equipment, the ones that are benefiting from 5G, the ones that are benefiting from EV plays. So I will include that, so that might help you understand which chips go into which, specific vertical or segment of chips. But Lam Research is in chip equipment, which is definitely going to benefit from this, and I've talked about that before. AMAT is one that I own, and this one is holding up very, very well. On Semi is going to benefit from some of the EV plays. There's unusual option activity on this. When I'm screening and I screened and I see this tightness on low volume right around that 50-day, that is a good sign. Now, I'm going to get to this later, but my point is you might want to see and let them, they still need to prove themselves and see if they break out, and I'll stress that later. But these are some of the things I'm seeing. AMKR, this is another one that a lot of stocks shot up in late January, early February, and then they just went sideways and caught up to their 10-week. That's actually pretty normal price action. You can see this here. When a stock goes vertical, it needs 6 to 8 weeks on average to put together maybe a flat base or a secondary base. And the whole point is that's why the 10-week is a guide. So it ran up, basically pulled back to its 10-week, right around that 50-day. And now you have a couple of tight days right on the 21-day. If this was a midweek video or a weekend video, I think that would be a great setup or something to at least watch. ENTG, one of the members actually emailed me that they couldn't make this webinar, and they asked me to discuss it. It's ironic that it was one I was going to discuss anyways, but this is another one, semiconductor equipment, where they all pretty much fit strong earnings and sales growth, and it's working maybe on a double bottom base. I can go to the pattern recognition. It's just calling it a consolidation, but it could be a double bottom. I mean, you can justify whatever you want because this second one is lower than over here. But either way, it's a base, and it's at least starting to tighten up on some low volume above the 21 day. MKSI is another one, similar type of pattern with a base here. Corvo, which is more in the 5G space. Corvo, Skyworks, Marvell are in that space. This one's sitting right on its 50-day and 21-day. And Skyworks is another one that's just sitting right here on light volume, right on its 50-day. So that's at least a constructive sign. CAMT is another one that shot up in early February and caught up to its 10-week. That's why I always stress, you can see this. It's basically held this 10-week the whole way. That could be another entry point where it ran up and went sideways and built a nice base here. This is one that I own. I kind of liked in the middle of the base, this big, huge volume that came through, and it held its 50-day, and it's just sitting here on light volume. UCTT, another one that I own. This is one that I talked about, showed great relative strength, ran up, retested that 50 range. Also sort of a smaller cap name, a little over 2 billion in the semiconductor equipment space with great revenues and triple digit earnings growth. And then ICHR, there's a whole bunch. I'm just trying to show you some. This is one that I told you I took a half position on Fridays. It started to move out, and at least it's acting well. I'm going to get into a few others and then some comments, and then I'll take some questions. There's a lot of retail names that are on the 52-week high list. Again, if you're not sure, do I buy, this retailer, or do I buy a sporting goods one, or a clothing one, or the Gap, or whatever ones are showing up here? I think the better way to do that is just to get broad exposure to the XRT, which is the retail ETF. I discussed it here. It was a nice entry point, and then it shot up. It came right back to retest, and it's just sitting super, super tight here on its 21-day. That's a good sign. I mean, I did also notice, speaking of sporting goods, I know Hibbett's been acting well. Dick's Sporting Goods is building a base as well. There's a lot in retail, but I think XRT can give you broad exposure. As far as some biotech, I tried to group these. Curis, CRIS is holding up well. EPIX is one we've talked about before. That continues to hold up well here, ran up, pulled back to its 21-day. I do not have a position in this one, but it started to move out of this range. The one I do have a position in is MGNX. RA Capital is an owner of this one. I like how it pulled back. I did mention I bought a light position on last week. I did not add to it because I bought it a light position. Just it was a little bit extended, but overall it has pulled back nicely to sort of retest this pivot on some light volume, has unusual option activity, and overall the daily and the weekly chart looks pretty good as far as this level here to possibly get through. So that is one I still own. And then in medical products, medical equipment, INMD is another example. I'm trying to show you what stocks do. It ran up, and you can even see, talk about daylight. It was very extended from its 21-day and 50-day. So this is where I talk about you have two choices. You can trade this one when we mentioned it in the 40s, sell it into strength, or if you're going to hang on to it, just accept that you're probably going to have to sit through some volatility while it forms a base. But what it did on the weekly chart is that it ran up here, and now it's formed 7 or 8 weeks with some pretty tight closes. But the whole time, basically for almost a year, it has held the 10-week. And someone asked me about it on the webinar over the weekend, and I said, yes, you could enter a half position here on the 50-day. And at least if you have a half or quarter position or something, it's starting to head in the right direction. And it's nice to see it hold that 50-day. So that's a good sign.